liquidity voids are always mistakenly used as fair value gap. So obviously we know what a fair value gap is from my fair value gap video, and you'd almost think this is one, but this is actually a liquidity void. So what's the difference between a liquidity void and a fair value gap? Well, it's probably, you can probably point out right away. A liquidity void is going to be like a fair value gap, but it's going to be just gigantic, and it's going to be some big ass like news candle. Maybe it's just a random dump in the day, but it's liquidity void is going to be a candle that just looks out of place, if that makes sense. Um, there's not a single candle to me that looks out of place this whole time. Besides actually this is liquidity void. It looks very out of place. Now this was later, and then this was just a news dump. I don't think this had anything to do with news, but you can see the same thing. Like this to me is more of like a void. Like it's very big, and it's likely to be filled rather than rejected. Same thing with this one. It's a very out of place fair value gap. It's giant, and it's not supposed to, like, you don't really just get a fair value gap like this that rejects unless there's maybe an SMT or something. But hopefully from the first 1 minute of the video, you're kind of understanding what I'm saying. So this to me looks more of like an out of place void candle where we're getting consolidation, we're getting decent price action, and all of a sudden there's like a big fair value gap out of nowhere. Like, I mean big, not like a, this is not a void. This is just a normal gap. Something like this. Okay, same thing with this. This is just out of nowhere. We're getting good price action. Out of nowhere, we just dump like 50, 100 points in the middle. Like, this is likely going to be filled the next couple days, if I had to guess. I don't even think this would classify as a liquidity void. I think this is just a normal gap. I think these are just normal fair value gaps right here and here. It doesn't really look too out of place. To me, this is just a healthy dump, whereas this is more of like a voidy kind of dump here. Where's another? So like this one, perfect example right here. We're consolidating out of nowhere, a giant 100 million point dump, just out of nowhere. It's not typically fair value gap. We typically, what we're going to do is we're going to go back up and fill these random giant dumps out of nowhere. And you have to be very careful and not look for a rejection, okay, from them, because we will typically not reject them. This one, I'd almost say this was healthy. I think I would just probably classify these as fair value gaps. Now, you do see we do fill them both, but definitely a lot of rejections off of both of them. I mean, you can clearly see the difference. This just looks a lot more out of place than something like this. Now, the best way to use a liquidity void is in combination with liquidity. If you ever see a giant dump out of nowhere that forms a liquidity void, that's just a big just dump out of nowhere, and it takes out some low. That second, like the second we get a pretty decent reversal in that green candle back in the void, we're likely to just keep going up and kind of inversing that whole void itself. That's why like right here, you can kind of see just big dump, took out this low by a tick. I think it was a tick, yeah. And the second we get like this candle right here, I mean, it's very hard. Like, this void's likely going to be filled when I see that candle. It's like, that's what I'm kind of thinking at the time being. And that's what I kind of called out in my stream this morning. Let's see if I can find another one. Don't really see anything here. All right, perfect. This one, just another big liquidity void. It's just very massive. You're going to see that filled all the time. And you can see it's filled, not even, I think it was filled about 4 days later, fully filled. We did bounce off it, but it was end up being coming down fully filled. Like, I would not expect us to bounce here because of this. This looks like more like a void to me, if that makes sense. Like, it's going to be more normally filled. Same thing with like this right here. More of a void, not really a fair value gap. A fair value gap is going to be much smaller. Random dump out of nowhere. Again, it's usually going to be filled, and you can clearly see we're not rejecting it. I would almost classify this as a liquidity void. This is a news candle, but that's like, this is where it can get definitely subjective a little bit. You need to really read price action and hone in on price action. And Obviously, if we get bullish price action acting like this isn't here, then yeah, it's going to be a liquidity void, and you would expect us to pump through it. See if I find another one. Just looking for, yeah, like, I mean, this is just, to me, this is just a void. Just too many fair value gaps. When you have too many fair value gaps in a row, it's like a 100-point dump. It's usually all filled. We don't really go up and reject those gaps. It's just the same thing every time. Like right here, same thing. Too many gaps to the downside here. The second I started seeing that bullish momentum back up, I know we're probably not going to reject any of these gaps and just go straight up and fill them all. Perfect example right here as well. This is actually the only example that we actually don't come up and fully fill. So that's going to be, I'm going to use this for later, probably a later date. When we get that, we probably will fill it. But yeah, that's going to be used for, maybe we fill it tomorrow for FOMC. Another really good example here. Look at this one. This is just, look how incredibly these fill up. Like these just, when we get this price action right here, I know this is just going to completely fill because it's a void. There's so many left over. There's just so many blank and voided orders in here. There's chances are there's probably like a 1 second gap, like an actual gap in the market where literally the wicks don't even touch each other. So here's a wick and here's a wick, and you'll see legitimate gaps on like the 1 second chart for these. But again, typically these giant dumps are not fair value gaps; they're typically voids. And what's going to happen is we're gonna go end up filling them at some point. So it's important to know this because a lot of people who come in ICT, they think we're gonna reject these things, but definitely not the case. Even this, just a really good example of just a void getting filled. So yeah, that's kind of a video on liquidity voids. It's more of like a, you know how you know like 2 + 2 is 4, you just know it. You kind of just gotta, you'll kind of start to recognize the liquidity void over time and be like, okay, this is gonna make a V-shaped recovery back to the upside and not even reject this gap at all because it's a void, not a gap. Okay, so that's a liquidity void video. It's important to know. I really don't talk about these a lot on my stream. I kind of just know them, but I think these are gonna be very useful because they'll keep you from marrying us rejecting us. Like where people go wrong is they're like they draw the discount the premium and they're like, oh, above the 0.5 is premium, we're gonna reject it, and all of a sudden we rip through it and they're like, why is this getting blasted through? We should reject this fair value gap, when in reality it's probably a liquidity void. So just be careful of that. If you see an out of place dump in the middle of nowhere, it dumps like 50, 100 points, just it's probably a void. It's probably gonna get filled. So just remember that. That is it for now. I'll see you guys later. Peace.